Hello, dear friends. Welcome to Weekly View on Markets. Market consolidated during this week. Nifty traded in a small range of 300 points. Mid and small cap stocks also consolidated during this week. FIs were net buyers during this week. After many months, we have seen FII buying coming back into the Indian market. And DIIs continue to buy during this week also. Markets have taken a breather awaiting the state election results next week. There could be volatility in the market during election results. Another development is a temporary ceasefire between Israel and Hamas. This is a good news for the Indian markets. Second quarter result season is over, and second quarter results have good impact on the market. I have done the analysis of market valuation during this week, which you can see in this video. It is advisable to buy good quality stocks during corrections in the market, which I have been advising over the months, and it is always proved a good strategy to buy on dips in Indian markets. Let us look at value market indices performance. Nifty closed at 19,794, gained only 63 points during the week, closed with a gain of 0.32%. Bank Nifty also consolidated, closed at 43,769, gained only 185 points for the week, gained about 0.42%. Mid cap index is at 42,050, up by 239 points, that is 0.57%. Small cap index has corrected a bit, lost about 54 points. It is at 13,827, lost about 0.39%. India VIX is more or less stable at around 11.33. It is hovering between 11 and 12, which is a very stable thing. That means we are not seeing much volatility in the markets. Now let us look at sectoral performances during this week. Most of the sectors have gained, but the gain was marginal. So realty sector gained 1.48%. Metal sector gained about 1.03%. Auto sector 0.8%. Remaining all sector, pharma, oil and gas, energy, manufacturing, NBFCs, healthcare, all gained 0.5 to 0.8%. There were more stocks which gained during this week than the stocks which have lost. The advanced decline ratio was in favor of bulls. PSU stocks lost about 1.73%. FMCG stocks lost about 0.34%. Information technology stocks lost about 0.42%. MNC companies lost about 0.20%. There were few sectors who have lost during this week. Overall market was in a consolidation zone with a positive bias. Now let us look at technicals of the market. This is the daily chart of Nifty. I have retained the trend line which I have drawn during previous week. You can see market has come to the resistance level, and there it has got resistance. That previous resistance is also offering resistance at present. So Nifty has to cross this 19,800 levels. Then we will see a further rally, and then Nifty may go to the previous high of 20,200 levels. Mid cap index has crossed the resistance level, and after that it has, you can see small red candles. So mid cap index is consolidating for last 1 week, and there may be big move only after the announcement of state election results. Till such time, market may consolidate and be watchful about the election results, which may bring volatility in the markets. This is the daily chart of Nifty Small Cap Index. Small Cap Index has touched almost all-time highs of around 13,900. After that, it is consolidating and closed at 13,827. So I have analyzed the valuations in which I feel from here the small cap index may consolidate for more some more time because its valuations are very rich at this point of time. But there is nothing to worry. There are still good quality stocks at reasonable price available in the market. One has to analyze and search for those stocks and identify them and buy. Now let us look at Bank Nifty index. This is the daily chart of Bank Nifty index. As you can see, Bank Nifty index is below the resistance line. It has to cross 44,000 level, then only we will see strength in the Bank Nifty technically. But I have analyzed the earnings and valuation of Bank Nifty index. So it is good time to accumulate some of the quality banks like HDFC, ICICI Bank, Axis Bank, or even State Bank of India, Indices Bank. So banking sector is available at present at a reasonable valuation. Now let us look at valuation metrics which I have prepared after the quarterly results. Second quarter results are over. The result season started somewhere around 10th October and the result season is over now. I have taken the PE ratios at the start of the election, start of the result season, and the present, that is on 24th November. If you see, Nifty was trading at 22.27 at the start of the earning season, and now Nifty is at 21.5, trading at a valuation of 21.5 times the earning. On price to book value, Nifty is trading at 3.47. It is little premium valuation, but the price to book value is more or less between 3.5 to 4, which is not a very high valuation. And 1 year estimated forward P of Nifty index is 18.85. This is in line with the long term average. So the market valuation is in the comfortable zone as of now. Nifty mid cap index traded at 24.95 at the start of the earnings season. Now it is at 22.53. So despite there is a rally in the mid cap index, the valuation has come down. This shows the underlying strength in the earnings of the companies. On a price to book value, mid cap index is trading at 3.37 and 1 year forward P of mid cap index is 19.6. So still there are good companies available in the mid cap sector trading at reasonable valuations. Nifty small cap index was trading at 26.16 at the start of the earning season. Now it is at 26.16 and there is a rally in the small cap index. On a price to book value basis, it is trading at 3.4 of price to book value. And 1 year forward PE of small cap index is 22.74. So here we can see comparing to all the three sectors, large caps represented by Nifty 50 are available at a more reasonable valuation of 18.85. Nifty mid cap and Nifty small cap are available at trading at a premium valuation. So the risk to reward is more favorable in the large cap stock at present. Now let us look at Bank Nifty, which was trading at 16.31 at the start of earning season. Now it is at 15.01. So the earnings in the banking and financial sector was quite good during this quarter, which has brought down the valuation. And also, Bank Nifty has corrected from around 45,500 levels to 43,600, 700 level. This is another reason why valuation look better at this point of time. On a price to book value basis, uh, banks are trading at 2.54, and 1 year forward P is 14.82. So on the analysis, market is fairly valued considering 1 year forward earnings. Mid cap and small cap indices are in a premium zone. Banks and financial provide good opportunity at present level because they are on a price to book value basis 2.54, and 1 year forward P is 14.82. So banks and financials offer a good opportunity, and also large cap stocks is represented by Nifty 50 are trading at 18.85 price to 18.85 P forward P. So mutual fund investors should do SIP investment in mid and small cap funds because at present, because of the rally in mid cap and small cap indices, the returns of last 1 2 years look very very attractive. One should not chase returns and get carried away by this. So since they have gone up a lot recently, mid and small cap stocks may consolidate for next 1 year or so. So that is why avoid lump sum investment at this point of time, and don't chase the returns. Invest through SIP route in mid and small cap in mid and small cap mutual funds. Now let us look at other fundamentals of the market. RBI dollar reserves is at 595 billions. INR USD rate is at 83.37. Dollar index is at 103.42. Gold price is at 61,370. So because of huge demand during festival season for gold, the gold prices have moved higher from around 60,000 level to 61,370. One good thing is the crude price has come down to $80.23 per barrel. Lower crude price is good for Indian markets. Crude had gone beyond 90 and now it has come down. So that is a good thing for the market. FIIs have bought 1,504 crores during this week. DI has continued to buy. They have bought 2,112 crores in equity. RBI has cautioned against the retail loans by the banks and NBFCs. RBI feels that if there is too much of exposure to retail loans, we might have NPA from this sector in the coming years. So, accordingly, Finance Minister has also given a statement that banks and NBFCs should do careful loan distribution or lending to this retail sector. State election results will have some impact on the market, which are expected next week. There is signs of easing in Israel and Hamas conflict. A temporary ceasefire has been announced, and there is exchange of captives that have been held on both sides. So, also recently, Putin has given a soft statement yeah, in regarding Ukraine war. So these may result into some de-escalation between Russia and Ukraine also. This is good for the global economy, global supply chain, and also good for the Indian economy and for the markets. Investors should use correction to buy good quality stocks, continue their SIP investments, and hold on to their investments. Investors should be patient. They should not chase returns. Indian macroeconomic fundamentals are good, and investors will benefit if they have patience instead of chasing returns in mid and small cap sector. So this has been always a phenomenon. Whenever there is a high return, the investor flocks to that sector. There is a high exposure to that sector. After that, the sector corrects and investors get dejected. So instead of doing that and chasing returns, investors should regularly invest through SIPs. They should focus on their goals and remain invested, which will benefit them. So this is all for this week. If you like my video, please share with your friends, give your comments, like my video, and you can ask your questions. So we will meet again next week. Thank you.